Hi, you're with BloombergQuint. I'm Tamanna, and joining me today is my colleague Sajeet, Manghat.
Hi.
It's a big day because the first steps towards building a huge oil behemoth have been taken. The cabinet has given an in-principle nod for the acquisition of the government's 51% stake in HPCL by ONGC. So that has come through. Some details which we're getting right now. There will not be an open offer. The entire deal will take about a year, and it will cost ONGC more than 29,000 crore. Now what we're trying to figure out today is how exactly this deal will move forward, and joining Sajeet and myself in this endeavor is Mr. BK Chaturvedi. He's obviously former Petroleum Secretary and former Cabinet Secretary. Thank you for joining us, Mr. Chaturvedi, on BloombergQuint this evening.
Thank you.
Let me start off, Sajeet, by what are the major questions which now arise? Obviously, one is how ONGC is planning to fund this acquisition of over 29,000 crore rupees.
That's one question, especially because you're going to need more than 20,000 crores in either in cash or in equity to fund that acquisition, and government and if government is looking at a big divestment fill up from the amount of money, then they would ask for cash. Otherwise they would have gone for an equity option which is there. But again, 51% equity would give them a subsidiary status for HPCL, and that way consolidation of the financial accounts is possible. But even better would be ONGC already has MRPL as one of its step down downstream refinery, and HPCL will also add 15 million tons, which basically means the refining capacity will nearly double for ONGC once this entire merger happens. But it's not a merger; it's an acquisition for ONGC. Ideally, it would have been a merger kind of situation, which would be much better in that sense, because you can drive in more synergies, get more compliances.
But the merger was ruled out, wasn't it? The finance minister made it pretty clear that a merger would not happen, and today it is becoming more clear, as per sources from Bloomberg, that HPCL will continue to exist as a subsidiary of ONGC.
That's true, but you have to look at from a point of view of the government. Currently, you have a situation where you're going to pay ONGC will have to pay the government nearly 20 to 25,000 crores, and we don't know the modalities of the payment, whether it's going to be in cash or in stock, because there is going to be an interministerial group headed by the finance minister who will look at the modalities, because there are a lot of changes which needs to be done in terms of regulations, especially SEBI's takeover regulation, which needs to be taken care of. And I'm sure in the months to come, you will see the SEBI board will also step in to ensure that such consolidation does not trigger open offer when it concerns the government.
That's an important point. In fact, let's bring Mr. Chaturvedi into the conversation. Just first on that point, sir, more than 26% of a buy should trigger off an open offer. There will not be an open offer in this case. Will there be changes made going ahead to accommodate this exception?
Well, I think SEBI will have to look at it and see, because they have the norms for such acquisitions, and they will have to see whether they are going to give an exception and to the normal rule process. And if so, this could be challenged by HPCL's minority shareholders because they may not like to be a part of ONGC. And the second point, which is very worrying to me at least, is that I don't really see how ONGC is getting any better with this, except that government is the only gainer. They are getting around 25 to 30,000 crores of rupees in their kitty. But what is ONGC getting, I'm not so sure. This comparison with MRPL is not very fair, because when MRPL was bought, it was bought at a pittance of 60 crores. And this is being bought for the 25 to 30,000 crores, and it will be a subsidiary. So what will ONGC gain out of it? What value addition in the value chain? Some or the other, I'm not able to see my way through. I think that's one way. The only point one could say is that the ONGC's overall turnover of the company with OVL and when this HPCL and MRPL is already part of it, that will go up, and to that extent it will say that we are trying to build up a world-class company. But we are long way off.
No, but that was the stated purpose, that we will build a world-class company which will be able to withstand volatility in oil prices, will be able to compete internationally in acquiring assets. That is the stated purpose, isn't it, sir?
Yeah, that is true. But the world-class company, you see SABIC, you see the Chinese companies, they're all about more than $400 billion. The SABIC, etc., are more than $300 billion. This will be not more than $50 billion company. And I don't really see how you can compare the two. And it will take a long time before they can compete with those. And particularly, I don't see in respect of the value chain any addition. And that is my worry, that how will they come forward? As against that, ONGC is getting financially weak. They will be able to spend less on exploration, which is a key area. So I find that there is a major contradiction. On the one hand, we are saying we are going in for massive exploration, finding oil in the country. On the other hand, we are extracting 25,000 crores from ONGC and giving them a subsidiary, which in any case will run as an independent company.
That's right. You know, what we understand is that there will be the branding of HPCL will continue as it is. The value of acquisition is at current market price is coming to somewhere around 20,000 crores odd, and except for the fact that you have a deregulated downstream sector or retail prices, which will bring them constant margin, and it will be a profitable venture for ONGC. There isn't much kind of impact which is there. But again, as you mentioned, the minority shareholders will be up in arms, saying that they would also like to have an exit if government is going to charge an excess premium for the exit from HPCL, and ONGC will require to pay an premium. Remember, Tamanna, the current value is 20,000 crores, and we have hearing is between 25 to 29,000 crores. Yeah. That's roughly, more than 40-50% premium, which the government is asking ONGC to pay for their stake there. So, as a minority shareholder, anyone can come and challenge the government and say that if you are going to get 40% premium, then I would also want a 40% premium for the stake I hold. And that's where the challenge will come in front of SEBI, because how SEBI is going to handle such a situation. The other option which will be there, I am sure that IMG will be looking at it, but the other option could be that ONGC say that I am going to issue stocks, shares in my from my company to the government, and the government can increase stake in my company, and over a period of time they can divest it in the market and get whatever money is
there. So let's come to that detail, Mr. Chaturvedi. How will ONGC fund this acquisition? Because there is a CLSC report which says that it may sell, ONGC may sell its stake in IOC, which is about 25,000 crore rupees, to fund this acquisition. There is no detail forthcoming as of now how exactly that will happen, but what are your thoughts on that particular point?
Well, I have seen that report which mentions that they could sell their stake in the Indian Oil Corporation, and that will get them some money. But the point is that to that extent, again, you are weakening ONGC because these are their investments which they could have used anyway. One way it could be, as the other colleague was mentioning, for ONGC to issue stocks and for government to buy it and take money in terms of those stocks. I don't know whether government will like to do that, because in case their stated purpose is to get money through disinvestments, and then they may not like to have those stocks, because that doesn't really give them immediate cash. So that's a worry. And of course, the question of minority shareholders being up in arms and raising issues.
Yeah, some comments coming in from our viewers while this Facebook Live is on, and I'd like to share them with you, Mr. Chaturvedi and Sajeet. Sandeep Konda asking, is this kind of a disinvestment move which helps the government to meet its disinvestment target? Nishant Naik asking how it will impact oil prices, if at all. So any thoughts on some of those viewer comments coming in, Mr. Chaturvedi?
You see, these are two issues. Disinvestment is when ONGC sells its government sells its shares in the ONGC to the public, and the public pays the money. Here, ONGC is paying the money. So it is not really to that extent disinvestment. The money is not being brought from the market. It is being brought from the public sector. So effectively, it is one pocket of the government paying.
Because the government owns about 68% of ONGC as well.
Yeah, exactly. So it is the government is really trying to encash the ONGC's this thing, and one will have to see whether ONGC is in a position to do that. Government should strengthen ONGC and give it more cash so that they can make in exploration. I mean, they haven't. I don't know whether they have thought of that issue at all. And the second question of effect on oil prices, I don't think this is having any effect on oil prices, because oil prices are determined by the international market, which is much too big for this disinvestments.
If I can add to it, what Mr. Chaturvedi has been talking about, but ONGC benefits more if if the oil prices go up. What used to happen initially was that oil prices used to go up and they used to get higher realizations, and those were passed on as subsidies to the public. Now that retail has been deregulated in a big way, an upside in oil prices would be much better for ONGC. And if government goes for shares at this point in time, and if government is expecting oil to reach go to around 60 or so in the next 12 months, this move can increase the kind of the returns that the government can give. Today, if the government goes and sells it, it may get 25,000. But if oil goes to $60 a barrel, it may double up for the government in a year's time. So that's an option which the government may look, or the IMD may look at it if they have a long-term trajectory of how oil prices are going to move. And Mr. Chaturvedi has been handling the oil, oil ministry at that point of time, and a lot of subsidy was being given by ONGC to the downstream companies, right, Mr. Chaturvedi?
Well, at that when I was handling it, there was no subsidy being given, because what had happened was that the prices had been deregulated, and we were changing the prices every fortnight. That was the time. Later, in the last year, I think the prices started going above $35 per barrel. Then the questions of subsidies arose, and then I remember during my years as member of the Planning Commission, I recall a lot of subsidy being given to ONGC and in fact the downstream oil companies, in fact, for this thing. But the other worry which you will have to see when oil prices go up is that governments are prone not to increase oil prices of downstream products. So if oil prices go up and petrol prices and diesel prices don't go up commensurately, because government has already increased the excise duty and other things, they are already extracting a lot of money. And if those prices don't go up, and if they go up, then there will be a lot of criticism of the government, and which they won't like. So that is again a major issue, that whether government would be able to have the.
But in that case, won't it be a natural hedge for ONGC in that sense? Because on one hand, you won't be able to raise the petrol and diesel prices. On the other hand, you will have realizations coming from higher oil crude, which is coming in, and that would hold as a natural hedge.
Well, it will be a hedge provided there is the market forces are allowed to operate. But the difficulty is that the moment oil prices go up around above $60 and the petrol and diesel prices go above 60 or 70 or 100 rupees, governments are not willing to increase prices, because there's a lot of criticism that diesel prices have gone up.
And there's an inflationary impact as well. Just one point I want to focus on before we wrap up, sir, is you spoke about the impact of this acquisition on ONGC and said it doesn't look to be very positive to you. What about the impact on HPCL, if anything?
Well, HPCL, because the way it is being mentioned is that it will continue to work as a subsidiary.
Yes.
So if it is continuing to work as a subsidiary and it is getting oil at the market prices, which it was getting anyway, it will be selling its products at the market prices, which it is doing just now anyway. So I don't see how HPCL will get impacted unless ONGC works out with HPCL, which it could. where for some downstream products, some investments in some petrochemicals, in other downstream products, they work out with them because ONGC has the resources and financial resources and with the wherewithals. They work out with them. That could bring some more money to HPCL, and that could be positive for HPCL.
Okay, just to sign off, Sajeet, everyone has been speaking about this deal in the context of the great synergy which will emerge between ONGC and HPCL. If you could break that down a bit more, when we're talking about synergy, what really are those factors which will increase the efficiency of both companies?
The only thing which I can see here is the crude sourcing part of it, because ONGC will be able to provide crude sourcing to HPCL there. From a synergy point of view, it's very difficult to say that because both of them are listed companies and both will have to work on an arm's length basis. So in that sense, the synergies will not be as good as it would have been in the case of a merger. Yeah. So that is one issue which we would have to look at, because, and the second part is that the valuation of ONGC will even start getting a discount of a holding company, because now it's holding it already held HPCL, MRPL. Now it will start holding HPCL as a subsidiary, and so that holding company discount will start factoring into ONGC. The value it pays for HPCL stake may not have the same amount of value going forward.
Sir, just your final word on the synergy factor, because that's the buzzword right now associated with this deal, great synergy.
The synergy comes provided in this ONGC is able to invest in HPCL's downstream expansion, say petrochemicals and other downstream products from that. From there, synergy will come from that. ONGC could help with HPCL, and they work out some exploration blocks abroad, and they which may get some gas and oil with them, and then the synergy will come from HPCL. It could come from that, but as of now, since everything is on market prices and market based, and there is no merger, it is working as an independent subsidiary. This synergy has only this limited view.
All right. Thank you so much, Mr. Chaturvedi, for joining us on this conversation on BloombergQuint this evening. And Sajeet will be tracking this story in more detail over the next few hours.
Not only next few hours, next few weeks and months, because the IMG has to come out with the final structure of it. And my guess is that there will be a lot of regulatory changes which needs to come in, because there will be a lot of eyebrows which will come in from the minority shareholders and from investor advisory services who will look at it. Today, when we speak to many of them, they don't want to come out openly because it's a government decision which is there, and they don't want to be seen openly criticizing the government. But point is that they are raising eyebrows and saying that how will it work? You're putting a burden on another company, and if the purpose is to create an integrated oil company, why do you go for the divestment route? There are many other ways to do it, do a merger, or maybe issue shares, and you divest it in the market as and when the prices are much better.
So a lot of questions which need to be answered, and to stay tuned with all the latest on this big story, do log on to BloombergQuint.com. Thank you for joining us.